Hi everybody, I hope you guys are doing well. My name is Mohit. Now, if you guys are watching this video, there is a high probability that you have got your investment banking interview scheduled. So, congratulations on that part. You are done with 50% of the hard work. So, now let us focus on the remaining 50%, which is the interview. So, today we are going to cover the 10 most frequently asked questions in an investment banking interview. Now, I have prepared these questions in a very integrated manner, and there is a high probability that the majority of your interview would be somewhere around these questions only. And in whichever investment banking firm you are giving your interview, whether it is a boutique firm or it is a big investment bank, you might witness at least 7 to 8 questions out of these 10 questions only. So, with this, let us begin with our first question. So, the first question which you can expect after giving a tell me about yourself answer is walk me through the P&L of one of the client that you have worked upon. Now, through this question, the interviewer is trying to grasp what kind of experience do you possess, what are the skills that you have applied in your work experience, and how good were you at your role. So, while answering to this question, you need to list out all the income sources that were there in that P&L. By this, I mean you need to segregate revenue into parts and identify which products or services formed the major part of the revenue. For example, in an airline industry, 60% of the revenue might be coming from sale of tickets, and let's say 40% of the revenue might be coming from the loyalty program of that airline. So you need to bifurcate and tell them what were the major sources of revenue. Apart from this, you need to also tell what were the direct costs involved, what were the indirect costs involved, and what operations did you perform on those items. Whether you worked as a auditor, whether you worked as an accountant, whether you worked as a FP&A analyst. So all these things you need to tell to the interviewer. An interviewer may cross question a few things based upon your answers. So the next question is explain the financial model that you have created. Now, if you have got an investment banking interview schedule, there is a high probability that you might have done some financial modeling certification course or you might have created some financial model. So the interviewer will ask you this question to grasp how good are you at financial modeling or how seriously have you done that certification course. So in answer to this question, you need to mention all the inputs that you have used in creating that financial model. So our inputs would be balance sheet, P&L, cash flow statements of maybe past 5 to 10 years. Then you need to mention what assumptions did you use to forecast the revenues, gross margins, operating margins, capital expenditures, and so on. Then you need to mention which valuation technique did you use while creating that financial model, whether it was a discounted cash flow model, whether it was a comparable company model, or some other kind of a model. So, in short, you need to be thorough with the overall workflow of that financial model. Here, one more thing which the interviewer frequently asks is how did you calculate the cost of capital? So, you need to be thorough with that how did you calculate cost of capital for your financial model. So, the next follow up question that might come up is what are the different types of valuation models? So, basically, there are three types of valuation models: cash flow based valuation models, which includes the DCF, which is a discounted cash flow, dividend discount model. Then we have the market based valuation models, where we use a comparable company analysis or a comparable transaction analysis. Then we have the asset based valuation models, where we use NAV or replacement cost or liquidation value. Then the follow up question might be which valuation model is best suitable for which situation. So they might give you a company that this is a particular company, these are the cash flows of the company, this is the particular industry, and the interviewer will ask you which valuation model will be the most suitable. So discounted cash flow model is most suitable for companies having stable cash flows and with investors having long term investment horizon. Dividend discount model is usually used by small individual investors whose main focus is on the dividend income and the terminal cash flows which they would receive on selling those shares. Then we have the comparable company analysis, which can be used by businesses which have comparable peers in the market. For example, a private company into a FMCG sector has a similar listed peer in the market. So the ratios of that listed company can be used to value that private limited company. Then we have the comparable transaction analysis, where we use the valuations of the peer companies which have recently gone through maybe mergers and acquisitions, maybe an IPO or some other kind of equity transaction. Or we can also use the previous transactions of sale of equity in the same company as well. Then we have the NAV or replacement cost. Now this is used for asset heavy industries like mining, real estate, banking, where assets form a major part of the valuation of that company. And then last we have the liquidation value, which is useful for companies facing bankruptcy or dissolution. So these are the questions which you might face around valuation models. Apart from this, interviewer might also ask how this valuation model works. For example, an interviewer might ask, how would you value a company using a discounted cash flow model? How would you value a company using a dividend discount model? How would you value a company based on a comparable company analysis and so on? So the next question which you might face would be around the key financial matrices. The interviewer could ask you what is enterprise value, what is market capitalization, how would you calculate market capitalization from enterprise value, what is EBITDA, what is adjusted EBITDA, what is EPS, adjusted EPS, what is working capital, what is working capital cycle, how do you calculate working capital, what is net worth, what is the difference between net worth and shareholder equity. So you need to keep in mind that net worth and shareholder equity is the same thing. Then what is ROE, what is ROCE, how do you calculate these two things, what is the difference between them. Then she might ask you what is free cash flow to firm, what is free cash flow to equity, what is cost of capital, how do you calculate cost of debt, how do you calculate cost of equity, what are non-operating expenses, what are non-recurring expenses, and how will you deal them as well in your financial model. So you need to be thorough with all these concepts as these are very highly testable in your interview. So the next question which you might face could be around ratios. So the interviewer might give you two companies and ask you which financial ratio will you use for comparing these two companies. So you need to have an understanding of which ratio can be used in which situation. So PE ratio can be used for mature companies having stable earnings and predictable growth patterns. EV to EBITDA ratio can be used for companies having high level of debts or those industries where depreciation and amortization amount is high. Price to book ratio is useful for asset heavy companies like banks and real estate. And enterprise value to sales ratio is useful for early stage growth companies who do not have positive earnings yet, which will help investors know how much revenue they are getting for every dollar invested. And the last is the price to cash flow ratio, which is useful for companies having significant non cash expenses or high volatility in earnings. So the next question is also a very frequently asked question. It is how will you value a loss making startup which will not generate positive cash flows in the next 5 years? So basically the interviewer here is trying to test what method other than discounted cash flow method can be used in valuing that startup. So the valuation of this startup can be done on the basis of cost of recreating the tech, products, services, or the supply chain that the startup has developed over the years. Through this question, the interviewer is trying to test your analytical skills and your knowledge beyond the discounted cash flow model. So the next question is, tell me about any recent M&A or IPO transaction that you are aware of. So basically this question is there to check your interest in the financial markets. So here are a few things which you can tell the interviewer about that transaction. So basically what was, you can tell what was the deal month, what was the parties involved, what was the valuation at which the transaction happened, who were the investment banks involved, and other similar kind of informations. This will help the interviewer know that yes, you have a fair bit of knowledge of what is happening in the market and how well do you understand these transactions. So the next question might come around your technical skills, in which the interviewer would ask how much would you rate yourself on a scale of 1 to 10 in Excel and PowerPoint, and what is the latest formula that you have learned. So here you need to mention along with your ratings the different tasks where you have used Excel, the various formulas you have used, the different tasks for which you have used PowerPoint, and what kind of presentations you have created. So all such things you need to mention it to the interviewer, because after joining an investment bank you would be spending majority of your time into Excel and PowerPoint only. So it is very important for you to know these tools. The interviewer is also very interested in knowing how much capable you are in using these. So the last question which you would face in an investment banking interview or any other interview is, what makes you a suitable candidate for this job and why do you want to join investment banking? So you can answer this by saying you have interest in financial markets, you love working in a dynamic and challenging environment. Investment banking gives a very good exposure and learning experience. You get to work with the top management of various companies. It improves your analytical skills. You have to analyze various reports, presentations on a daily basis. It improves your communication skills as well. You need to communicate with the investors, with the startup founders, with the banks, your senior leadership. So all these things improve your communication skills a lot. And finally, you need to mention your commitment towards delivering high quality work. And because of all the above factors, you will be a good return on investment for the company. So these were the 10 most asked questions in an investment banking interview. If you liked this content and you want similar content on other profiles as well, do let me know in the comments and subscribe to this channel, and also share this video with your friends who has also received an interview call from an investment bank. I would be very happy if you could come back and share your interview experience in the comments after your successful interview. Also, I have created a complete course on Power BI, which is one of the leading business intelligence and data visualization tool currently present in the market for the purpose of creating reports, dashboard, data analysis, financial models. So do check out this course. Thanks for watching. Bye bye.